Hello friends, welcome back to Investment Professor, where real investing meets real results. I'm AK. Today I'm going to walk you through one of the highest win rate trading strategies using the MACD. This strategy is incredibly simple, works across nearly every market, and most importantly can help you make money. So let's dive right into it. Understanding the MACD. First off, what is the MACD? MACD stands for Moving Average Convergence Divergence, one of the most popular technical indicators among traders. The MACD indicator helps us identify trends in the market, and it's pretty darn good at it. If you've been trading for a while, you've probably heard about or even used the MACD before. However, most traders don't get the full potential out of this indicator. That's why in this video, I'm going to show you a unique way to combine the MACD with other indicators to boost its performance. Setting up the MACD indicator. First things first, let's add the MACD indicator to our chart. You can do this on any platform, whether it's TradingView or your favorite charting tool. Now that we have the MACD added, let's break down how it works. The MACD consists of 4 components. MACD line, usually blue, a 12-day moving average. Signal line, usually orange, a 26-day moving average. Histogram, the difference between the MACD line and the signal line. Zero line, the center point of the indicator. When the MACD line crosses above the signal line, the histogram turns green, indicating upward momentum. When it crosses below, the histogram turns red, signaling downward momentum. The closer the lines are, the smaller the histogram gets, and the further apart they are, the larger the histogram becomes. Using MACD for trend identification. Now that we understand how the MACD works, how do we use it to identify trends? A basic way to use it is to look for a cross between the MACD line and the signal line. When the MACD crosses upward, it indicates upward momentum. When it crosses downward, it signals downward momentum. But here's the twist. You should only enter a trade when these crosses happen below the zero line for long trades and above the zero line for short trades. This ensures you're aligning with stronger trends. But it's not enough. Why MACD alone isn't enough? While the MACD is great for identifying trends, there's one major flaw. It works best in trending markets, but can give false signals in choppy or sideways markets. For example, if the market is trending down and the MACD shows a buy signal, you might end up going against the trend, which usually doesn't work out well. How to fix this? Add a 200-day moving average. To fix this issue, we combine the MACD with a 200-day moving average. The 200-day MA helps us confirm whether the market is in an uptrend or a downtrend. Here's how to do it. Add the 200-day moving average to your chart. If the price is above the 200-day MA, the market is in an uptrend. If the price is below the 200-day MA, the market is in a downtrend. Now let's combine everything. For a long trade, you'll want the MACD lines to cross below the zero line, while the price is above the 200-day moving average. This ensures you're trading in line with the market trend. For short trades, it's the opposite. The MACD lines should cross above the zero line, while the price is below the 200-day MA. Example, a long trade setup. Let's look at an example of a long trade. Suppose the MACD lines cross upward below the zero line, and the price is above the 200-day moving average. You would enter a long position here. To manage your risk, set your stop loss just below the 200-day MA. This way, the 200-day moving average acts as a support level. For your profit target, I recommend using a 1.5 risk-to-reward ratio. In this setup, the strategy works perfectly, and you walk away with profit. Take a moment to admire the profit. An impressive 248%. Isn't that amazing? This clearly shows how powerful the strategy can be when everything aligns perfectly. But we're not done yet. Let's explore another example, this time focusing on a short position to see how it performs in a different market scenario. In this case, all the necessary conditions for a short trade have been met. We've identified the signals, checked the technicals, and everything points to a potential downward movement. So based on our discussion and the strategy we've laid out, we'll enter a short position. Now personally, I usually steer clear of short positions. I tend to stick with long trades because they feel more aligned with my trading psychology. Long positions give me more peace of mind, allowing me to approach the market with patience and confidence. For me, the idea of buying into upward momentum feels more natural and comfortable, and that really helps me stay disciplined during trades. However, this doesn't mean you have to avoid short trades. If you've analyzed the market and you're confident in your read, then, by all means, go for it. The most important thing in trading is sticking to what works for you and trusting your process. Now, let's take a look at the result of this short trade. And just like that, we're looking at a profit of nearly 61%. That's incredible, especially for a short position. Wow. Even though I usually prefer long positions, this just goes to show how profitable shorting the market can be when the right conditions are met. Avoiding false signals. Adding price action. As good as the MACD and 200-day moving average combination is, it still gives false signals during sideways markets. To avoid this, we need to add a price action component. Here's how. Identify key support or resistance levels where the price has previously bounced. Wait for the price to hit that level again. But don't jump into the trade just yet. You'll want to confirm the bounce using the MACD. For long trades, ensure the price is above the 200-day moving average and the MACD lines cross below the zero line near a support level. This gives you a high-confidence trade setup. Recap and final thoughts. So there you have it, a powerful strategy combining the MACD, 200-day moving average, and price action to filter out false signals and catch high-probability trades. Whether you're trading stocks, crypto, or Forex, this strategy will give you an edge in the markets. Thanks for sticking with me throughout this video. Now it's time to put what you have learned into action. Take notes, learn from it, and succeed. Let's grow together. Drop your questions or thoughts in the comments below. Thanks for watching, and I'll see you in the next video.